The market continues to put the pedal to the metal. As we look at this weekly analysis, will there ever be a pullback? Let's go. If we start with SPY weekly, we notice here that this buying volume was higher than average. And this light blue line is the upper Bollinger Band, the thing that price stays within 95% of the time. And when we look at the weekly here, we see that it's continuing to expand, and it will continue to expand next week. And price is staying well within this band. In fact, if we look here, we notice that there still is room for price to move higher within that band. The moving averages on the weekly are getting quite extended from their 20 simple moving average. And if we look here at this 5 exponential moving average, you can see how when we put it, in relationship to the 20 simple moving average, we can tell that this has been increasing in size, which is no indication whatsoever of bearish behavior. And you'll notice here that we've been holding the 5 exponential moving average pretty much all the way up on this climb, which is super bullish. And I'm not suggesting that we're just going to have a pullback for no reason, and we'll go through some of the economic calendar later. But even if we were to come back and pull back from a weekly perspective, we have this rising 13 exponential moving average, and coming back to this area and bouncing off of it would be super bullish. If you need some help with moving averages, I'll link a video at the end of this one will help make you an expert. If we go ahead and we pull out our fib extension tool and we start from this swing low, go up to this swing high, and then pull back to the higher swing low and go ahead and set it, we'll notice that we've already eclipsed that 100% fib extension level. Now, at this point, I'm not suggesting that we're going to automatically run right for the 1.618 fib. That would be kind of crazy, at least not all in one shot anyways. So a lot of today's weekly candle action was set today by the Meta earnings and it popping today up over 20%. And when it comes to technical analysis, a lot of times from the standpoint of the theory and everything you're looking at, it is not an exact science. So typically, even anywhere within a range of this would be normal. But before I'd ever start talking about the weekly showing weakness, we'd have to see some type of doji candle or a reversal candle. And as of right now, we're not seeing that. And we'll go through the economic calendar later, but it's pretty light. And we'll look at yields in a bit. But after the news today about jobs and wages, they were pumping. And 99% of the time, when yields and equities are moving higher together, well, this never ends well for equities. Pre-market, we gave back the Meta bump, but then when the market opened, it was pedal to the metal for most of the day as retail gobbled up Meta's new dividend. And if we're looking for any weakness out of the MACD, I'm not exactly seeing this, as we still have dark green bars with the MACD line pretty well established over the signal here, and it appears to be increasing. I think 500 could be a pretty interesting psychological level to look at. I mean, let's face it, with no prior support and resistance to look at now that we're in blue sky territory, will MMs let retail go ahead and push this a little bit higher before going ahead and starting to trim some positions and take profits, getting ready to rotate into the next great thing? As let's face it, at this point, the market was pricing in 6 Fed interest rate cuts, and at this point, I don't see any cuts happening at least until mid-year. The Q weekly chart is looking very similar to SPY, so moving on. IWM, we finally see something a little bit different here with the Russell, and the first thing we notice here on the weekly is that it put in a doji candle, which could be either a continuation or a reversal, because as this signals that buyers are indecisive. Now, one thing that's a little bit more interesting about this one, we see here that the selling volume was higher than average, and this MACD, line looks like it's closing the gap to the signal as the histogram is decreasing. So this potentially looks like it's getting ready to cross on the weekly. Next week's calendar earnings will continue where majority of companies are beating at this point, and the economic calendar is pretty light. That kind of stuff should be bullish, other than the fact that we saw those very hot job numbers, and will the market have to start repricing less cuts by the Fed this year? Make sure to check out my moving average video that I mentioned earlier. That's all I have for now until the next video, and we'll see you then.